Today, the latest on mortgage interest rates. Hello, I'm Martin North from Digital Finance Analytics. Welcome to another post covering finance and Australian property news. Today, I'm with Sally Tyndall from Rate City, and we're going to talk interest rates. Hello, Sally. Good to see you.
Good. Great to see you, Martin.
Thanks very much for spending time with us. Let's start with just a quick overview. What is Rate City?
It's a really good question. We're a financial comparison website, and what that means is that we compare all different products that are on the market, from home loans, credit cards, personal loans, bank accounts, savings accounts, so people can understand what is on offer and what are the lowest rates, what might be a competitive rate, and help you sort by features as well. And I think that's really helpful because finance and personal finance is not a one-size-fits-all model. People are looking for different features in different products, and our site helps you use filters to get to the right financial products for your personal finances, so you can make a more informed choice.
So that means you must be sucking information from all the crevices to try and actually produce some relative comparative data.
That's exactly right. It's a big job. We have relationships direct with banks and with other lenders. They give us data sometimes, quite often in advance, so we can have new rates on our site as quickly as possible. But we also do some scraping in the background where we can check provider sites to make sure that we've got the full suite of products and the right rates. Because the most important thing for a comparison site is to have, as many on the market as you possibly can, but also accurate information. And so accuracy is our key focus here.
I understand. They need to be right or they're useless, right?
Exactly. Or that worse still, they're misleading, and we don't want to be misleading, that's for sure.
So it's been an amazing week this week from a rate perspective, right? With the two majors moving their rates yesterday. So what have you actually been seeing, and where are mortgage rates now, let's say, compared with last year, and who's moving up, who's moving down? What's the story?
It's a very good question, because the RBA has done nothing for 2 years, and yet everything is happening from other people. We've seen APRA pull a lot of levers, particularly last year. And then this year we've seen the bank bill swap rate soar. We've seen the banks really feel the squeeze with their profit margins. And so from about late March, I think Suncorp was the first bank. Banks started lifting their variable rates as a result of that increase in the bank bill swap rate. What we used to see is that the big banks would often go first or near the front of the queue, and the smaller banks would follow through. This time it's happened completely in the reverse. The smaller lenders have, hiked their rates in April, May, June. We saw a vast flood in late June and July, and the big banks held out for as long as they possibly could, and we attribute that to the Royal Commission and the pressures behind that, because they've been copying it on the front pages of our papers for a number of months now, and I felt like they didn't want yet another bad PR story by lifting rates. I think they thought they could ride it out for a while, and then they obviously realised that they couldn't.
So they're basically late to the party, although I noticed that Suncorp and Adelaide actually did one set of hikes earlier in the year, and then they had another bite at the cherry last week, right? So there's something else going on in terms of some of the smaller players, and they're wrestling with their margins as well, one assumes.
I think they're still wrestling with their margins, because what we saw from Suncorp at the beginning was very low rate increase. A lot of the smaller lenders at the beginning were hiking by 5 basis points, 6 basis points, really, really small increases, whereas the big banks have come out with, 14, 15, 16 basis points, a lot higher. So in the case of Suncorp, it might be that they made a call back in March. They were the first ones out of the gate, but they probably undercooked the hike And so they've come back and had another go at it and hiked again. That's what we've seen. We may see other smaller lenders follow suit again.
Well, they certainly still have the same funding pressures, certainly from the modelling that I do. But I guess the other interesting question is there were some drops in rates, sort of almost offsetting, but they were for new loans rather than existing loans, and specifically on certain fixed deals. So there's been a bit of a rotation between the two.
Well, it's a really interesting market at the moment because the banks are feeling the pressure, and there's two ways to raise more money and to, boost those profit margins. And one is by hiking rates, particularly for your existing customers, but the other one is to get new customers in the door. The other thing that's troubling the banks is that growth in home loan lending is slowing, and in some months actually, going backwards. So there are less loans being written out there. Everyone's fighting for the same customers, so there is a price to be paid for a new customer, and the banks are really aware of that. So if they can get someone lured in with a really low fixed rate or a really low variable rate on a basic product, that's new money in the door for them, and that's one other way to boost their profit margins.
So one way of thinking about it then is they're basically lifting the back book, that big portfolio of loans, creating a little bit of firepower to then try and go and hook new borrowers. And I guess that raises an interesting question about the fairness and equity of that in the current environment.
There's no fairness in this. I think loyalty is well and truly dead. I think it was dead last year, but it's definitely dead now. If you've been with your bank for 10 years, 20 years, it means nothing. We did some research the other day to see which lenders did reward loyalty, and we came up with two. Reduced Bank and Virgin, who gives out frequent flyer points the longer that you stay with them. But really, everyone else there is out there rewarding the new customers, and that sends a very strong message to anyone, particularly anyone on a variable rate, is you need to vote with your feet. If you don't like the rate that you've got, then unfortunately, the way that the system is working at the moment, the best way to get a lowest rate is to walk your business down the street to someone more competitive.
But I guess it also raises the question, with the tighter lending standards that we've got now compared with last year, there will be some people who, when they try to do that, hit the buffers because effectively they can probably now borrow less than they could last year. The value of their property may actually be lower. And with the scrutiny on the very expense categories, it just might be impossible. So they're in a way locked in to these higher rate loans.
That's right. And I know you've done some good analysis on this. Mortgage prison, it's very real, and it's happening out there to a lot of Australians where they are locked in and have to wear these variable rate hikes with no way to get out of them. People really need at least 20% equity in their home if they're going to think about refinancing. I mean, first of all, you've got to pay lenders mortgage insurance, and refinancing won't be cost effective if you have to pay lenders mortgage insurance. But secondly, as you say, the serviceability requirements have just been crunched so severely that people that used to be able to borrow large sums of money no longer are getting approved. So yes, there are less and less people able to refinance, and as property prices drop in Sydney and Melbourne, that will only worsen. However, people that are in the fortunate position that they have, a decent amount of equity paid down in their loan, or a decent amount of equity in their loan that they've been chipping away and paying it off over 5 years, say, maybe even a little bit more, they're the people that will be able to refinance. They're in a better position.
So it depends on who you are and what your deal is and all those things, which is quite interesting. Some will be winners, some will be losers.
There's definitely winners and losers in this. Absolutely. I think, people really need to understand their financial position first off. That's a great first port of call. The other great easy win for a lot of people, regardless of their financial position, is if they're with a lender, they should check the website of their lender and find out what rate they're offering new customers, and put in just one simple call to their bank and ask them to match that rate, because often banks will cave to that kind of pressure and say yes to a rate cut as an existing customer if you threaten to leave. And that's all, then you've negotiated a rate cut within one phone call, which is far easier than refinancing and moving to a different lender.
That's great advice. So there's one of the big four, as at 3:30 on Friday afternoon, has not yet moved. What do you think about that?
It's really interesting. NAB did threaten to break up with the other big four banks a while ago, and maybe they're going to finally follow through on this promise. History will say that they won't, but time will tell. It'll be interesting to see. Obviously, 3:30 on a Friday afternoon is prime time for banks to put out rate hike press releases. They've only got about an hour left to go, and it seems sensible if they're going to do it that they would do it today. Or perhaps next week. But after that, it will be interesting to see what NAB does, because they will have the lowest, well, they do already have the lowest standard variable rate of the big four banks on the table right now as we speak. They also have now the lowest basic variable rate on the table at 3.69, which is incredibly competitive in the whole market, not just among the big four. So NAB are in a very good position marketing-wise, if they can hold on and withstand the pressure to hike rates.
Just depends on whether their margin can stand it, I guess.
I think it's their shareholders as well, yes.
Yeah. So I guess the final question I had was, we're seeing the volume of new loans beginning to ebb. The data's come out today and it shows it down again. So are you seeing that reflecting in your traffic on your site, or are you still seeing more people coming and looking simply because of all of these things that are going on?
That's a really good question as well, because yes, we have seen the search volumes for home loans cool slightly with the market. That's not surprising, but people looking to refinance, particularly when big banks hike out of cycle, the traffic spikes. There's no question about it, because people are unhappy with banks putting up rates. There may be a logical explanation behind it, and the cost of funding pressures and all the rest of it, but for a mum and dad that are struggling to pay the mortgage, they're struggling to find that extra $40 or $50 a month in extra money for their mortgage repayments now, and they look at the big profits that the bank posts of $8 million or $9 million, they scratch their head and they genuinely don't understand. So that really spurs people on to think about refinancing. There's obviously that question about whether they can with their financial circumstances. But if they can, I think we'll see more people moving away from the big banks. Certainly we saw with the lending, housing finance figures that have come out recently, we've seen a trend towards non-bank lenders. We've seen people moving away from the big banks, and that may continue. What would happen then, hopefully, is that the big banks will be forced to be more competitive. Everyone will be forced to be more competitive. So the more people out there refinancing, I think the better for the health of the market.
Okay, so not only are you helping yourself if you refinance, you may be helping other people too.
That's exactly right. What a great message. I hadn't thought of that, but it takes a united front. You need a lot of people to switch before the banks will start taking notice. I think one big switch actually kicked off that movement where, if you get a lot of people refinancing at the same time, that will put pressure on the big four profit margins, and it will force them to be competitive.
Good message. Sally, I really appreciate your time today. It's been really, really interesting to talk with you. And maybe we should check back and do this again a bit down the track, because I think the next few weeks and months are going to be really interesting with regard to mortgage interest rates. So thank you very much for your time, and perhaps we'll chat back later.
Sounds great. Thank you, Martin.
Thank you.
If you like what you heard here today, please like the post and add a comment or question. I read them all. And if you've not subscribed, please do subscribe by hitting that subscribe bell. And if you'd like to support our efforts to continue to make great content, please do consider supporting us via our Patreon program. Here's a link, and it's also in the comments below. I'm Martin North from Digital Finance Analytics. Thanks for watching, and I'll see you again next time.